Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. Pre-sale activity dominates early stage innovation. The blockchain ecosystem is witnessing a surge in promising pre-sales, with projects leveraging next-generation technologies to capture investor attention. Bitcoin Hyper, a Layer 2 solution focused on enhancing Bitcoin's functionality, has raised over $5.6 million in its ongoing presale. By integrating smart contracts and decentralized finance (DeFi) capabilities onto Bitcoin's main chain, the project aims to address scalability concerns while maintaining Bitcoin's security. Its staking mechanism offers a 182% APY, drawing participants eager to benefit from early-phase token distribution. Meanwhile, Bitcoin Swift (BTC3) has transitioned to its second presale stage, with 65% of tokens allocated. This AI-driven blockchain emphasizes programmable smart contracts and a hybrid consensus model, which proponents argue will revolutionize digital asset utilization. Projects like these highlight the market's appetite for tokenized infrastructure and scalable solutions, particularly as Layer 2 ecosystems gain traction in Ethereum and beyond. Ethereum Layer 2 advancements and institutional treasury wars. Ethereum's Layer 2 race is intensifying with Linea's announcement to launch its native Linea token. Designed to centralize Ethereum capital, 75% of the token supply will be controlled by a consortium led by SharpLink Gaming. The company has aggressively accumulated ETH, now holding over 438,000 tokens, valued at $1.6 billion. This strategy mirrors Bitcoin's corporate treasury approach, with SharpLink engaging in staking and dividend-generating activities. Competitor Bitmine Immersion Technologies remains the largest corporate ETH holder at 625,000 tokens, implementing share buybacks to offset stock volatility. These developments underscore Ethereum's maturation as a platform for corporate treasury management, potentially driving demand for ETH as companies seek higher yields through network participation. Meme coin revival and regulatory tailwinds. Meme coins are re-entering the spotlight, buoyed by favorable regulatory developments and speculative trading. Snorter token $Snort, a multi-chain meme project leveraging Solana's ecosystem, has gained traction despite negative remarks from Solana's founders. Meanwhile, token 6900, a nihilist-themed meme coin, is positioned to capitalize on a potential altcoin rally as Bitcoin consolidates near its all-time highs. The U.S. Genius Act, which regulates stablecoins and taillights corporate participation, has created a pro-crypto environment, with Hong Kong's impending stablecoin ordinance due on August 1st, further legitimizing tokenized assets. Analysts speculate that a Bitcoin rebound could trigger a meme coin rally, as retail investors traditionally rotate into high-volatility assets during market recoveries. Institutional adoption and ETF rotation. Bitcoin and Ethereum ETFs continue to attract institutional inflows, reflecting a recalibration in capital allocation. Spot Bitcoin ETFs recorded their third consecutive day of inflows, with BlackRock's iShares Bitcoin Trust dominating activity. Ethereum funds have now seen 17 days of net inflows, a record streak symbolizing a structural shift toward altcoins. Experts attribute this trend to Ethereum's improved technical indicators, including golden cross formations in the ETH-BTC ratio, and its alignment with enterprise use cases. Corporate treasury accumulation, staking yields, and regulatory clarity under the Genius Act are pushing institutional investors to rebalance portfolios, potentially signaling the dawn of a dual crypto market cycle. Regulatory clarity and White House policy delays. The U.S. regulatory landscape is undergoing transformation, with the White House poised to release a historic crypto policy report on July 30th. The document is expected to outline stablecoin licensing, SEC, CFTC jurisdictional clarity, and the inclusion of XRP in the strategic digital asset stockpile. This has sparked speculation about XRP's regulatory reclassification, with its utility in cross-border payments positioning it as a strategic asset. Simultaneously, the Anti-CBDC Act, which restricts federal digital currency development, is advancing, aligning with the administration's preference for private sector innovation. These developments suggest a regulatory framework that prioritizes innovation while addressing investor protections, which could drive global crypto adoption. Corporate blockchain integration and mainnet launches. New infrastructure developments are reshaping the blockchain ecosystem. ICA's mainnet launch on Sui enables native cross-chain asset control, addressing interoperability challenges critical for decentralized finance. Bitcoin Swift. Transitioning to Solana for presale operations. Plans a dedicated mainnet launch in 2026 with AI-powered smart contracts and compliance-ready architecture. These projects emphasize enterprise-ready solutions, bridging the gap between traditional finance and decentralized technologies. Their focus on audit-compliant frameworks and secure bridges indicates a push for institutional trust, a prerequisite for mainstream adoption. Miner expansion and payment system integration. Physical infrastructure expansion is accelerating, highlighted by Bitmain's planned U.S. production facility. The mining hardware manufacturer aims to establish a Texas or Florida-based headquarters by late 2025, targeting North American market dominance. The strategic reshoring aligns with U.S. industrial policy, positioning crypto mining as a critical sector alongside semiconductors. Concurrently, Square has rolled out Bitcoin payments via the Lightning Network to millions of merchants, allowing instant conversions with up to 50% lower fees. Block's S&P 500 inclusion underscores Bitcoin's growing acceptance in traditional finance, potentially catalyzing retail and institutional payments adoption. Protocol roadmaps and ecosystem competition. Solana's 2027 roadmap focuses on Internet Capital Markets, ICMs, prioritizing market microstructures and application-controlled execution, ACE. The protocol aims to create a globally accessible ledger for tokenized assets, enhancing smart contract efficiency. This contrasts with Ethereum's Layer 2 initiatives, setting the stage for competitive ecosystem development. Meanwhile, corporate ETH accumulator strategies exemplify how protocols with operational utility are capturing institutional capital, a trend that could redefine network valuation models in favor of staking yield and governance participation. Strategic Bitcoin reserves and policy repercussions. The U.S. Strategic Bitcoin Reserve, composed of seized cryptocurrencies, represents a paradigm shift in national asset strategy. While taxpayer funds aren't involved, the reserve recognition elevates Bitcoin's status as a strategic asset. This, combined with Mara's $950 million Bitcoin purchase commitment, signals a multi-pronged institutional accumulation strategy mirroring MicroStrategy's path. As governments and corporations adopt Bitcoin as a store of value, network security and overall scarcity could drive price appreciation, particularly amid macroeconomic uncertainty. Decentralized finance and cross-border payments. Emerging DeFi solutions, such as Grow Finance's $250 million real-world asset tokenization on Avalanche, demonstrate the sector's expanding use cases. Brigand's integration with Credify for permissionless lending, further versatile institutionally oriented financial products. These developments align with broader adoption trends, where regulators are increasingly recognizing tokenized assets. The inclusion of XRP in national stockpiles, contingent on its cross-border payment utility, highlights how specific cryptocurrencies might serve as bridges between traditional and digital financial systems. Market uncertainty amid regulatory and macro events. The crypto market is navigating a period of consolidation, with Bitcoin fluctuating near $118,000 and Ethereum testing support levels below $3,900. The Federal Reserve's impending rate decision and White House policy announcements have introduced volatility. However, sustained ETF inflows and corporate Treasury accumulation suggest underlying strength. Analysts anticipate a potential Bitcoin pullback to lower buy points, while meme coins and altcoins prepare for a speculative rally contingent on broader market recovery. The confluence of regulatory clarity and macroeconomic stability could pave the way for a prolonged bull market, though investors must weigh risks tied to institutional profit-taking and global liquidity conditions. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.